What if you already have a whole life insurance policy? Yeah, I was telling an acquaintance about the infinite banking finance strategy some years ago. We had met at a networking group and agreed to meet at another time for the specific purpose of my explaining the infinite banking in tax-free cash growth warehouse finance strategy. I had explained that the strategy was built on the extremely valuable advantages that whole life insurance provides the owners by way of the guaranteed tax-free cash value growth from the high compounding dividend interest. When I got to the part about leveraging the cash value with policy loans, my friend's face suddenly dropped into a sad expression. I asked her, "What's wrong?" She said, "You have no idea how much I wish I had known this just a month ago." You see, she had a whole life policy for some 20 years, and it had built up a considerable amount of cash value. She explained that she and her husband had gotten into a bind with a balloon payment coming due and not having the needed liquidity to cover it. So they sold a painting they owned and really loved in order to cover the bill. Well, it turns out that they had more than enough to cover the payment in their cash value of their whole life policy, but just didn't know that they could use that money. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. So here's the thing. If you have a whole life policy and you've built up some cash value in it, you can use it to implement the infinite banking tax-free cash growth warehouse finance strategy. But unless your policy was designed for use with infinite banking and was issued by the right insurance company, it's not going to give you all of the best advantages that a true tax-free cash growth warehouse account will. You see, most life insurance companies are stock companies, and that means that the company is owned by the stockholders, and it is therefore accountable to those stockholders who have invested in the insurance company to make a profit for themselves. As a result, those companies do not offer dividends to their policy owners. Only the minimum guaranteed interest that is dictated by the insurance commission. Also, many, if not the majority of insurance companies, charge higher interest rates on their policy loans than they pay to the cash value of their clients' policies. And that means that while you can take policy loans, it may not be advantageous to do so. Then there's the direct recognition policy that many insurance companies have on their policy loans. That means that when you take a policy loan, the money in your account that is used as collateral for the loan stops earning any interest until the loan is repaid. So, what can you do if you already have a whole life insurance policy, but it wasn't designed as a tax-free cash growth warehouse? There's an option available to you called a 1035 exchange, which allows you to trade in your old policy for a new one. Depending on your age, health, and how long you've had your old policy, it may not be advisable to do that. So you will want to have an infinite banking expert that you trust to look at everything and advise you. Now, here's the really good part about the 1035 exchange option. Any cash value policy may be exchanged with this rule. And that means that if you have a universal policy, whether it's a GUL, IUL, or VUL, it can be exchanged for a whole life policy, and it doesn't have to be with the same company. Personally, I would advise anyone who has any kind of universal policy to get rid of it, exchange it for a whole life policy. That's because eventually universal policies will drain any cash value in it to pay the fees and increasing cost of insurance. And then when the cash value runs out, it'll lapse. Then you'll have no cash value and no insurance. So exchanging a universal policy for a whole life policy will save your cash value, because the cash value in your policy will transfer right on over to your new whole life policy. And that is the case no matter if your old policy is already a whole life or if your old policy is a universal policy. And of course, exchanging universal policy for a whole life policy will protect you from losing your life insurance due to the policy eating up all your cash value and then lapsing, because whole life policies don't do that. The other great thing with the 1035 exchange option is that when a policy is designed correctly, you may be able to get more total life insurance for the same total premium you are currently paying. That's what happened for my wife and I. I had purchased whole life policies for Amanda and myself, and we paid $300 and $400 a month premiums respectively. It was 2 years later that I learned about the designing and how to design a policy for the infinite banking tax-free cash growth warehouse strategy. So when I constructed the correct design for our policies, I was then able to exchange what we had with one company for new whole life policies with a different company that offers the best design options all around. And we both got 50% more insurance for the same premium we were paying for the old policies. And this is a big deal. We were then 2 years older than we were when we got the previous policies. Now, when you're in your 20s, 30s, or 40s, a couple of years in age doesn't make a huge difference in the premiums. But when you're in your 50s or older, a couple of years in age does make a noticeable difference. And the age of the insured is one of the major factors that determines the premium required for a policy. So the bottom line answer to the question, what if I already have a whole life policy, is you may be able to use your old policy as your tax-free cash growth warehouse and practice the infinite banking finance strategy as it is. It may be, and likely will be, advantageous to get with a trusted infinite banking specialist to review your old policy and options and exercise the 1035 exchange option and get a new policy specifically designed for using as a tax-free cash growth warehouse to get the most possible advantages and practice the infinite banking finance strategy. And remember, if you have built up any cash value in your old policy, it will transfer to your new, correctly designed for maximum advantages whole life policy, so you have everything to gain. Now, if you find this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. You have questions, we have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link is to my Calendly page is also below. And if you'd like to become a client of ours, the link to the application is also below. We're here to help, and we look forward to helping you Aloha and mahalo for watching.